Hi everyone, this is a technical analysis on USDJPY. Let's start with a fundamental overview first. The USD got a boost across the board on Monday as the US China tariff relief was a much better than expected news. The market started to look at the more hawkish scenario where we get an average 10% global tariff rate and economic activity picks up on an easing in growth fears and general uncertainty. That led to a hawkisher pricing in interest rates expectations with the market now seeing 50 bps of easing for the Fed by year end, compared to like 120 bps at the peak of the fears in April. The short dollar trade was also pretty overcrowded, so the unwinding in positioning gave the greenback even more strength. As we repriced the interest rates expectations, the USD started to lose ground against the major currencies once again. We will likely need the market to price in an even less dovish path for the interest rates to give the greenback another boost. That could come from economic data or hawkish Fed comments. On the JPY side, the currency has been driven mainly by global events rather than domestic fundamentals. Alongside the Swiss franc, it's been the favored safe haven in the currency space amid the swings in the risk sentiment. The recent positive mood in the markets weighed on the Japanese yen, which lost ground against all the major currencies and got back all the losses on Wednesday with no clear catalyst. Now, on the daily chart, we can see that USD JPY fell back below this major trend line in what could end up being a fake out. From a risk management perspective, the buyers would have a better risk reward setup around this upward trend line to position for a rally into the 151 handle, while the sellers will look for a break lower to increase the bearish bets into the 140 handle next. On the 4-hour chart, we can see that the price is now filling the Monday gap, which could act as a support. This is where we can expect the buyers to step in with a defined risk below the gap to position for a rally into new highs. The sellers, on the other hand, will look for a break lower to extend the pullback into this upward trend line. On the 1-hour chart, we can see that we have this downward trend line defining the bearish momentum on this time frame. The sellers will likely continue to lean on the trend line to push into new lows, while the buyers will look for a break higher to increase the bullish bets into the 151 handle next. These red lines define the average daily range for today. For the upcoming catalyst, today we get the latest US jobless claims figures, the US PPI, and the US retail sales data. We will also hear from Fetcher Powell, so it's worth to keep an eye on that in case he delivers some market moving comments. Tomorrow we conclude the week with the Japanese Q1 GDP report and the University of Michigan Consumer Sentiment Survey.